Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time. The 15th of April, normally tax day. I think they extended that. But I'm all good. All good this year. All right. Um, so yesterday we had another amazing day of gains in the market and just absolute and utter delusion on the part of traders as we uh, come very, very close to very, very stiff resistance on the S&P 500. It was the triple Qs that drove the market higher by and large yesterday. Top names like Apple, rose and closed near the highs of the day yesterday. You can see I have this marked here. I was looking for a break to a new daily low, never got it. So a fairly strong close despite the earnings which came out of JP Morgan, which were just absolutely horrible. Absolutely horrible. And he made no bones about it. We're headed for a severe recession, yet they took the markets higher. Now, credit Guy Adami last night on that roundtable on Fast Money, and he's been steadfast, saying, "Jesus, for the most part, I'm going to paraphrase here, the market's delusional." Hey, Tommy, uh, our stock's going to have a big correction again. I believe so. I'm not overly confident, Tommy, that we're going to go straight down after yesterday's price action. I think that what they're going to do is they're going to do a rope-a-dope. We have a long way to go between now, despite the fact we're already in earnings season, a long way to go in traders' lives, meaning a day is a long time, a week is a lifetime. Uh, a a long way to go before you get big tech, which really drove the market up higher before they announce. And I believe it's Amazon that really kicks things off for the quote unquote tech sector. So I don't know whether or not we go straight down yet. I think that they're going to keep this market uh, moving up with a bias, or I should say, moving sideways with a bias to the upside. And what we're going to do, because we did add to shorts yesterday, what we are going to do is we are going to watch for lower highs, lower lows, divergences. And then as we near the earnings reports coming out of the tech sector, and this assumes that we hold up that long, then we're going to lean in far more heavily to the short side once we see a break in this market. So right now, all we're doing is we're building up an initial short position for the resumption of what I believe is a bear market. I've been steadfast on that, and a move to the downside. That doesn't mean they can't squeeze the shorts higher. So I would not get overly aggressive simply because that we're seeing the S&Ps this morning moving lower. Let's go to S&P 500 here. Now here you could see I did have an alert which fired off. That was set here. And technically you can't see it because it's already fired off. I had it set right below this support level here. I was looking for, right here actually. We moved up higher. I was looking for a pullback, a higher low, and then a break below that support level. We're only getting it this morning. So the S&P 500 is pretty weak. Down nearly 2%. let's circle back here. We have the Russell 2000 getting crushed, down nearly 3%. Very, very weak. And they took out the alert that we set yesterday as well. So, and this is what I'm looking for here. Take note of a lower high. This is what I was talking about. So, we have a lower high. You could argue that we have taken out lows here. I think the question now becomes for the market, does Wall Street, are they firmly secure in a new net short position? And if it's no, then they're going to keep this market moving sideways. Good morning, John. Good morning, Oliver. They're going to keep this market moving sideways until they get that net short position. And then they're going to unleash, you know what? RSI clearly signaling weakness here. Now we have this morning Citigroup coming out, Bank of America. Bank of America is really going to be an earnings report of interest. Again, as with J.P. Morgan and Wells Fargo, we'll be listening for whether or not they're raising loan loss reserves. Are they seeing delinquencies? J.P. Morgan is certainly preparing for mass delinquencies, and they established a huge amount of loan loss reserves. So let's take a look at J.P. Morgan in the pre-market. They did not close great yesterday. And once these banks start going, yeah. So we're very, very close to a new daily low on J.P. Morgan. The path is clearly to the downside here in terms of trend, at least on an intraday basis. So support is broken. I think that the reports out of BOA and Citi are only going to add fuel to the fire here. Let's take a look at Wells Fargo this morning. And welcome, new member Ronald. I just saw that you joined up. Welcome. So, obviously, as with JP Morgan, you're seeing the same thing here on Wells Fargo. The thing that threw me last night, I didn't send out market wrap to members until late. And I just kept going back and analyzing and reanalyzing the charts. What threw me was that the XLF, the banking ETF, actually closed up yesterday. And I was trying to figure out, did I get it wrong? What was I missing? I couldn't I didn't see anything, but I'm open-minded to possibly have overlooked something. And again, I think what it's going back to is that they're just keeping this market in check as best as possible, setting up new short positions, and then we're gonna wake up one morning similar to that today. And I'm not saying today is it, because I would not go chasing this market short. I would wait to see how we close out the day. Do we rally back? Do we close green? If we do, then you certainly don't want to go add into shorts. If we close near the lows of the day, then it would be interesting to see whether or not that's an opportunity to go leaning into the short side. I am hoping that they move this market sideways. Again, we're looking for lower highs, divergences, and as we begin to see earnings out of tech, and if those earnings, which I expect that they will, if those earnings disappoint on a forward-looking basis, especially, meaning guidance, then we're going to look to lean even heavier to the short side. So Wells this morning, you could argue, if you want to keep an open mind, and I would strongly encourage everybody to do that, it'll keep you safe. You could argue that we're building a base here on a 4-hour basis. Perhaps even a downward sloping handle, forming a coupled handle formation on a 4-hour basis. So I want to keep an open mind, right? We have a couple of bad earnings reports. The futures are red. Is it a trap? I don't know. I want to see how we close out the day. I'm not chasing this market to the downside this morning, only to get whipsawed by the end of the day. So we're just going to sit back. We're short the market. If it goes, it goes. If we break to new weekly lows, if we're very weak on the week, pardon the pun, then we'll look to add more. I'm in no rush. Let's take a look at the dollar and bonds, folks, because there's something disturbing that's setting up. And I've been sharing it with members, and we're going to keep going over it. This is the dollar ETF. Well, now I'm going to get made to look like a fool here. Okay, so we were weak. We popped up this morning. Let's see whether or not we break out. What we've been seeing is, over the past several trading days, weakness in the U.S. dollar and weakness in bond prices, the TLT in particular, the 20-year bond ETF, of which we are short. And we remain short of the bond market despite the activity of the Federal Reserve. And I'll share with you why. Here's the TLT. Yeah, I'm going to go to gold in a moment, Tommy. It's kind of disturbing, the price action this morning, but it wasn't completely surprised. Take note of bond prices here. Let's see if I have my annotated version here. Where are we at? Sorry, folks, I should have been prepared. I got started late this morning. TLT, where are you? All right. Let's just do this. Take note that despite all the Federal Reserve, this is a daily chart, all the Federal Reserve's activities, we are very, very weak. We have lower high potential here. We've been trading down since the 6th. Now, can we pop up higher? Sure. But once you start seeing, and ultimately this is what's going to happen, once you start seeing the bond market, the price of bonds move lower, yields inch up higher, along with the U.S. dollar, here's the dollar bull ETF. Look at how weak the dollar is. despite the fact that we're up this morning. Very, very weak. I'm not going to be the least bit surprised to see this rally fade on the dollar. And what does that mean? What that means is that you have a crisis of confidence in the United States as viewed by the rest of the world. So let's just keep an eye on this. This is more of a longer term barometer for this market and economy and how we're being perceived, who wants to buy our debt. And right now, the Federal Reserve is going to be by far the largest purchaser of our own debt. And that is a scary thought. Let's check out bonds this morning. You know, you start worrying about this market if you have all this activity. Let's go to the 30-year. All right, so we're seeing the spike up higher this morning, which is good overall. Fed's in there. They're buying up bonds, keeping yields low. That's the 30-year. Just watch for a fade here, folks. And it doesn't have to be today. It could be a year from now. Watch for a fade. See the lower highs here? And we have a possible head and shoulder setup here. Left shoulder, head, right shoulder. And I identified this prior, I guess, because I drew the neckline already. And there's your neckline. We break this neckline. That's a serious problem for the bond market. Because you got to ask yourself the question, if the Federal Reserve can't keep the bond market up, who's going to? Let's take a look at gold prices this morning. Now, the pullback on gold is no great shock. I spoke about this earlier in the week when we broke down below this lower band of support. We did manage to rally back. I did warn about these topping tails. As a matter of fact, I think I spoke about this yesterday morning. And we broke down yesterday morning below support. Now, we had a false breakout yesterday, and we took out these lows. So at current, in the very short term anyway, the path of least resistance is to the downside for gold. Will there be opportunities? Yes. We're going to be looking to add to our gold mining trade, our silver trade. Let these prices come in. It's deflation right now that's going to provide opportunity. Also, as the markets weaken up, traders are going to remember what happened the last time around when we began to weaken up. You saw, good morning, Alex. You saw weakness in gold prices, silver prices, the gold miners, they all pulled back. I don't think they're going to pull back as severely as the last time, because of all the Federal Reserve debt monetization. So I think that this time around, you're going to see a pullback. Traders are going to view it as opportunity because they missed the boat so far on the way up on gold. And nobody's talking about this trade. I mean, you have only a few people out there that are really pounding the table for any length of time on gold. I've been steadfast on it, remain steadfast on it. This is an opportunity. Would I go buying right here, right now? Probably not. I'd let this all play out. Silver. I have way too many symbols up here this morning. Okay. Yeah, silver is very weak. Here's a head and shoulders setup that played out yesterday. Left shoulder, head, right shoulder. Here's the neckline. And it broke. So we could retrace all the way down here to 1537. Remember, silver is extremely volatile. So give it some room. Don't try to catch a falling knife here. It is correcting. I do view it as an opportunity. I don't plan on selling any silver today. We're looking to buy, not sell. And here's the market sending a signal. And this is what I'm going to be looking at for the overall market. As we look to add to shorts, are we limping up higher with RSI moving lower? And that will embolden me to go adding to shorts, but probably not today. I want to be very, very careful here. With adding to shorts. Too many people are waking up this morning saying, wow, it's time to go short in the market again. You need to wait to see how we close out the day, or else they will rip your face off. They'll pull out some news event. Meaning, I'm surprised at this. This came up this morning. I'm surprised that this didn't spike the market. White House leaks draft plan to reopen American economy. What that tells me is the fact that we're not getting some sort of a pop higher. Is that this is already priced into the market. So that's silver. Let's check out energy. Are we getting a bid on oil? And for those folks out there, if you just joined in, if I can ask you to hit that like button, I'd really appreciate it. Thank you very much. And please subscribe to the channel. Love to have you. Oil, where are you? Or nat gas, whichever comes first here. Here's light sweet. Oh my God. Oh my God. What a mess. Interesting though. We may be seeing a retest on oil of lows. Would I be a buyer here? No. I'd want to see some strength. I want to see a breakout. We're going to set up a tripwire here. I'll be looking for an early warning signal if we break out and above this resistance level in yellow. But at current, we're flirting with recent lows. We have no reason to believe that the path of least resistance won't remain the same and we break, but we'll watch it. Maybe we'll get a bid. But this world is awash with oil and demand non-existent. Let's check out nat gas. Nat gas has been firming up a bit lately. You can see the last time I checked nat gas, it has now given up a lot of those gains. And this is why we wait for breakouts, right? Every time we rally up and into resistance, we've been fading. And now we've broken back down below support. So nat gas very weak, down 2% this morning. Let me read some comments here. Tommy, thanks for that smash button support. I don't understand why people think vaccine news is relevant. The vaccine has to go through at least 14 months of trials. I don't think it's relevant in the short term, trader's lifetime. Do you think that there's a chance oil can be lower under 20 barrel? Uh, yeah, I mean, with right now the only story that can be spun to try to get oil up higher is China reopening. We're not going to be at full capacity for a long, long time. Uh, so yeah, can it go lower? No doubt about it. We're in a deflationary environment short term. Longer term, in all probability, we are going into an inflationary environment. But what right now, what you lack is um, is velocity of money. Right? They could print all the money in the world right now. It doesn't spark inflation. What sparks inflation are the friction of transactions, the number of transactions that are being made. And right now, besides people purchasing on Amazon and DoorDash and Grubhub, I mean, they're not buying. You may get some CapEx. I just saw Alex, he's put a note in here about Zoom. Individual outlying names like Zoom, will they do well? Sure. I mean, this is their time. These names will probably be names that you do not want to be short of, even if this market rolls over. And this move to working from home has been going on for a long, long time now. I think the country, if there was an optimistic note here, I think that this country was well positioned to not be as adversely impacted by the virus were it to have hit 4 years ago, because people have been working from home. The move out of commercial real estate, out of the office, and working from home has been going on for a long time. Companies, rather than raising paychecks, they've been focusing more on work-life balance and how they can adjust their bottom lines by using less commercial real estate, less office space. And what do? They use the employees' overhead rather than buying more. So they've been on this path for a long time. So Zoom is only going to do well here. There's a big argument out there. Will Microsoft continue to do well? Microsoft, I'm hard pressed to see how Microsoft is going to do better in this environment. Maybe they have a couple of companies out there that they purchased that'll help goose their bottom line. But I think they're going to be a net loser from this situation, because you're going to have less employees, therefore less subscriptions to their products. So I'm not in that camp. That argument was being made yesterday on Fast Money because of their balance sheet. I think their balance sheet is very, very strong, but they'll go down worse than a lot of their peers that don't have a strong balance sheet. I don't think that they're going to be spared. And here's a little bit of trivia for those RSI buffs out there. Take a guess of where you might think that Microsoft RSI is on a yearly basis. I'll pause here before I bring this up. One guess where Microsoft's RSI is on a yearly basis. You're going to freak. .91 on a yearly basis. We're leaning into the third standard deviation Bollinger Band. So this is a stock that is extremely overbought and susceptible to a pullback and not necessarily cheap. Going back to Zoom. I think that we could rally here up to 149. Good morning, Cap. Yeah, tech was strong. They goosed Apple and Microsoft in particular, taking the those are the two largest components of the triple Qs, and that drove the triple Qs up higher. But we did go leaning into the short side even further yesterday, despite that strength. So Zoom could head up here to 149.97 resistance, and we'll see whether or not it breaks out or does it pull back. So I wouldn't go shorting it here. I probably wouldn't go buying it. It's kind of in no man's land at current. Let's overlay some weekly trend lines. There are nothing there developed yet. Still too young of a stock. I'd wait for a breakout above that 150 level before I got long of the shares to see whether or not it holds up. We did put in a lower high. We broke down to lower lows on this 4-hour chart. And if we break down below this support level here, that's a problem for Zoom because you have a left shoulder, head, double top, right shoulder, and you have a break of a neckline. Do you think we will see all-time highs in physical gold and silver? Absolutely. Silver is going to take longer to get to those all-time highs, probably much longer. And the reason is that gold is viewed as pure money. Excuse me. Gold is viewed as pure money, whereas silver is viewed as both, yes, whatever day you're trading silver on, it's so volatile. One day it's viewed as a precious metal, the next day it's viewed as an industrial metal. And once you get inflation and an economy that is beginning to improve, and you see industrial usage for silver begin to pick up, well, then you're going to see silver rip through the ceiling. And back in 2011, when gold peaked, silver actually outperformed gold. So that's when you know that in all probability the end is near for the rally in both gold and silver. Once you see that gold-silver ratio really get distorted right now, well, even though they're correcting, I think that they both have a lot of room to the upside in front of them. Dallas, good morning. S&P gap down under 2,800. Fed will probably rally again today. Probably. Look what they did last Thursday. You can't put it past them. I'm worried about the day we wake up and we get the headline news. And this is why I'm so nervous about being net short the market and why I'd rather be heavily invested in the miners and in silver. I'm worried about the day we wake up and the markets are limit down. And we have the Federal Reserve out there saying that they put out a list, just like they did last Thursday, of what ETFs, stock ETFs they're buying, the triple Qs, whatnot, spiders. And then the free market, for all intents and purposes, is over and done with. So, but I'm not going to put it past them. Well, only retail investors think that news makes moves. It's just an interesting comment that was just made by MK. Uh, what the news can do. The Japanese have been buying stocks for a while now. It hasn't kept the stock market from going down. But what the news does in the short term, it builds a false confidence, and that will allow stocks not to go straight down. They can, as I put it earlier, for those that are just joining in, what I think they're going to do right now is that they're going to rope-a-dope the market. That's what Muhammad Ali, that was his style of fighting, one of his styles of fighting. And they're going to keep this market propped up with headlines, squeezing the shorts. And I think that we're going to be reluctant to lean into the short side any further until we see tech begin to report earnings and that rosy picture that's being painted right now, that's tattered, torn to shreds. And once that's done, then this market's going to roll over. And I found it interesting that and I didn't realize this, that Amazon had suspended a lot of their deliveries, preferencing preferred goods. Now, how much is that going to impact their bottom line? And I think that's something that is not being priced in to Amazon, because Amazon is making new all-time highs. And it's coming off the lows of the session. So Amazon is an interesting play, especially an options play into earnings. And they're one of the first of the big quote-unquote tech names, if you want to call them tech, to report earnings. So that's definitely a trade that we're going to be looking at, is Amazon. If they keep propping Amazon up and into earnings, we'll be looking to put on an options trade to the short side. Is AMD too expensive to buy right now? I'm not the guy to answer that question for you. I'm not a fundamentals guy, nor do I know what their balance sheet looks like and what their growth prospects are. I just look at the charts. I keep it really, really simple. And they're looking very, very good. And frankly, and this is a very good point, I'm glad you brought this up, the semis did very, very well. They had a horrible week last week in terms of technicals, yet they have been able to shrug off that bearishness. And the semis closed at the highs of the day yesterday. So I'm not going to be the least bit surprised to see the semis rally further into earnings. Would I go buying them here? No. There's no way. Would I go shorting them here? No. We're not at resistance. This is a daily chart. I would look to short AMD maybe up at the $59 per share mark if we get up that high, or if we break down below support at around, let's call it $52 a share. So the shares are moving up higher. They're simply a watch at current with a bias to the upside. And with that, folks, I'm going to say everybody have a profitable trading day. Remember, bank earnings out. They'll continue today, later this week. I think even Goldman comes out. And next week is regional bank week. The week after, that's when big tech starts to report. And that's when things are going to get really, really interesting. So members will be in contact. Please hit that subscribe button, share with a friend, subscribe to the channel, and I will talk to you soon. Be well.